October 2025, Indian Motorcycle just got sold to a private equity firm for an undisclosed amount. Wall Street's calling it a smart move. But here's what they're not telling you. The last time Indian was owned by private equity, they went completely bankrupt within 2 years. And the decisions that led to this moment, they might just finish what was started decades ago. Listen up. Polaris just unloaded Indian Motorcycle to Carolwood LP, a firm that's never been in the powersports business. Their portfolio? Restaurants, real estate, and sports media companies. And now they own one of America's most iconic motorcycle brands. But here's the part that should concern every rider. Back in 2001, private equity firm Audax Group bought Indian for $45 million. By 2003, the company had collapsed into bankruptcy. Audax co-founder Geoff Rehnert later said the deal nearly crashed his firm and made him sick, literally. And the numbers tell a darker story. While Royal Enfield sold over 1 million motorcycles in their fiscal year 2024 to 2025, Indian moved approximately 26,000 units globally in 2024. That's roughly a 40-to-1 ratio. Triumph achieved record sales of 134,635 units in 2024, the 64% increase, while Indian declined for the 4th consecutive year. Let me show you what really happened, because this story starts way before the October 2025 sale announcement. It starts with Polaris facing serious financial pressure. According to Polaris's publicly filed financial reports in the third quarter of 2025, the company posted a net loss of $15.8 million. Compare that to the same quarter the previous year when they made a $27.7 million profit. That's a $43 million swing in the wrong direction. But the real pressure came from tariffs. Polaris projected over $200 million in tariff costs for 2026. In quarter 3 2025 alone, they reported approximately $35 million in tariff-related expenses. Their full-year 2025 adjusted earnings per share was expected to be approximately negative $0.05. Without tariffs, management stated it would have been around $1.10. So when CEO Jochen Seitz announced Indian was being sold to enable each business to move faster and deliver industry-leading innovation, the financial context tells a different story. Polaris was under immense pressure. Here's the critical number. Indian generated approximately $478 million in revenue for the 12-month period ending June 30th, 2025. That represented only 7% of Polaris's total revenue. And according to industry reports, Indian achieved its first profitable year under Polaris ownership in 2023, after years of losses. But revenue wasn't the only challenge. Indian's sales trajectory was concerning. According to Motorcycles data, Indian sold 25,792 units globally in 2024, down from their all-time record of over 30,000 units in 2021. In the first half of 2025, sales reached 13,988 units, representing a 2.1% decline and projecting a 4th consecutive yearly decline. The competitive landscape was brutal. Royal Enfield surpassed 1 million annual sales. Triumph broke their 122-year sales record. Meanwhile, Indian's market position was eroding, despite ranking as the number 2 American motorcycle brand. Now, here's where the story gets complicated. Because while these numbers were declining, Indian underwent significant strategic shifts that divided the community. The marketing approach changed dramatically. Traditional Harley-style campaigns featuring open roads and authentic biker culture were replaced with campaigns targeting younger, urban demographics. One campaign featured lifestyle imagery in downtown settings with designer aesthetics, a stark departure from Indian's heritage. Longtime riders noticed immediately. Online forums and social media erupted with criticism. Many felt the brand was abandoning its core identity to chase demographics that weren't actually buying motorcycles. Brand tracking studies reportedly showed Indian's authenticity scores declining during this period, though specific data hasn't been made public. The dealership network also underwent transformation. According to industry sources and dealer testimonials, Indian's dealership requirements changed significantly. Showrooms were redesigned with more upscale aesthetics. New standards were implemented that some longtime family-owned dealerships struggled to meet. One particularly emotional case involved an Ohio dealership that had been family-owned since 1952. The owner, a Korean War veteran, had sold Indians to 3 generations of local families. When new franchise requirements made it financially impossible for him to continue, he was forced to close. In his final interview with a local newspaper, he said, "I don't recognize the company I spent my life supporting." Stories like this weren't isolated. Multiple dealers reported similar experiences across the country. The institutional knowledge, the personal relationships, the deep understanding of local riding communities, much of it was lost in the transition. Then there was the electric motorcycle push. In 2020, Polaris created a chief electric officer position, signaling that electric motorcycles were a strategic priority. The Livewire project received significant investment and marketing support, but the market response was disappointing. According to industry reports, the Livewire sold fewer than 1,000 units in its first year, despite substantial marketing investment. Meanwhile, Indian's traditional lineup, models like the Challenger, Chief, and Scout, received comparatively less development attention. Industry analysts noted the opportunity cost. While competitors like Indian Motorcycle's main rival were improving their traditional engines and adding better technology at competitive prices, Indian's core lineup appeared to stagnate. The Challenger, despite being a strong platform, was being outsold by competitors' comparable models. In late 2024, Indian discontinued the entire FTR lineup, their only naked sport bike and most dynamic model. Polaris stated they realized certain costs associated with the wind down of the FTR product line. Industry sources cited low sales volumes, high production costs for the 1,203 cubic centimeter V-twin engine, and Euro 5 plus emissions compliance costs as factors. Aaron Jacks, VP for Indian Motorcycles, explained, "What we've learned, though, is we really see significant opportunity in the cruiser, bagger, tourer space. The decision signaled a retreat to safer territory rather than innovation." According to Motorcycles Data's industry analysis, Indian Motorcycle keeps struggling. The company, controlled by Polaris in the last years, is under strong attack, and although the traditional competitor, Harley-Davidson, is in free fall, new competitors are approaching Indian customers with both low-cost companies like Royal Enfield and premium companies, Triumph Overall, which are gaining terrain in the market segments where Indian's success is based. The same analysis noted, the company is very static and is not evolving an old-style strategy, which is clearly no more successful. Limiting the product innovation to the introduction of limited editions and special series on models developed decades ago and with engines heavy, old, low-tech, and no more attractive for young generations. This wasn't just one analyst's opinion. The numbers backed it up. The U.S. motorcycle market overall was down 9.2% in the first half of 2025 compared to 2024, with approximately 271,205 new motorcycles sold between January and June. This represented the weakest start in over a decade. March 2025 registrations plummeted 10.6%, marking the worst first quarter since the 2008 financial crisis. But while the overall market struggled, some brands thrived. Royal Enfield grew, Triumph grew 64%, Indian declined. Which brings us to October 13, 2025. Polaris announced the sale of a majority stake in Indian Motorcycle to Carolwood LP. The transaction was expected to close in the first quarter of 2026, making Indian an independent company again. Financial terms were not disclosed publicly. However, Polaris stated the sale was expected to add approximately $50 million to their adjusted EBITDA and about $1 to adjusted earnings per share. So who is Carolwood LP? According to public records, Carolwood is a Los Angeles-based private equity firm founded in 2014 by principals Andrew Schanfeld and Adam Rubin. The firm's size is listed as 2 to 10 employees. Their portfolio includes restaurants, real estate investments, sports media companies like Jomboy Media, Cha-Cha Matcha Cafes, and other ventures. Notably, Carolwood has no prior powersports experience, according to media reports. And according to industry sources, Carolwood has reportedly never sold any assets it has acquired to date. They appear to be long-term holders. Andrew Schanfeld stated, "Indian Motorcycle is a legendary brand rooted in American tradition, craftsmanship, and above all, a vibrant community of riders. We are privileged to guide its next chapter as an independent company and to foster its ongoing legacy as a symbol of performance and pride." The new CEO is Mike Kennedy, who brings over 30 years of motorcycle industry experience. He spent 26 years at Harley-Davidson, culminating as vice president and managing director of the Americas from 2010 to 2017, where he managed a network of over 800 dealers across North America and Brazil. After Harley, Kennedy served as president and CEO of Vance & Hines from 2019 to 2023, and most recently as CEO of RumbleOn, the largest powersports dealership group in the U.S. He holds an MBA from Northwestern University's Kellogg School of Management. On paper, Kennedy is highly qualified. He understands the industry, the dealer network, and the customer base. Approximately 900 employees will transfer to the new independent Indian Motorcycle, along with manufacturing facilities in Spirit Lake, Iowa, and Monticello, Minnesota, plus an industrial design and technology center in Bergdorf, Switzerland. The over 600 global dealers remain intact, and all current sales, service, and support operations continue. But here's the question that concerns many riders. What happens when private equity takes over? The statistics are sobering. According to industry research, approximately 1 in 5 private equity-owned companies go bankrupt within 10 years. High-profile examples include Toys R Us, Red Lobster, and Forever 21. In the motorcycle industry specifically, there are mixed precedents. Danes, the motorcycle gear manufacturer, was sold to private equity's Carlyle Group, and some customers reported declining customer service. Revzilla and Cycle Gear were sold to private equity, with some reports of decreased quality in house brand products and reduced warranties. However, there's also a positive example. Ducati spent 16 years under private equity ownership. Texas Pacific Group from 1996 to 2006, then Invest Industrial from 2006 to 2012, before being sold to Audi in 2012. During that time, Ducati achieved significant growth and eventually reached revenue gains of over 1 billion euros in recent years. And then there's Indian's own history. In 2001 to 2003, Indian Motorcycle was owned by private equity firm Audax Group, which invested $45 million before the company collapsed and went bankrupt in 2003. So where does this leave Indian Motorcycle? The brand faces significant challenges. 4 consecutive years of declining sales, a market that's down nearly 10% in 2025, competitors gaining ground with better products at competitive prices, a community that feels disconnected from recent brand direction, and now new ownership with no powersports experience. But there are also reasons for cautious optimism. Mike Kennedy knows this industry inside and out. Carolwood appears to be a long-term holder, not a quick flip operator. Indian is becoming independent again, which could allow for more focused decision-making. And the brand still has over 600 dealers and a passionate, if frustrated, customer base. The question isn't whether Indian will declare bankruptcy tomorrow. The question is whether the new ownership can reconnect with the community that made Indian legendary in the first place. Can Indian recover? The pieces are there. A qualified CEO, manufacturing facilities, a dealer network, and a brand with over a century of heritage. But recovery requires more than just business acumen. It requires understanding what made Indian special. The connection between rider and machine. The community of veterans, blue-collar workers, and multi-generational families who saw Indian as more than just a motorcycle. They saw it as part of their identity. 900 employees and over 600 dealers are watching. Millions of riders are watching. And history is watching, because we've seen this story before. Will it end differently this time? That depends on whether Carolwood and Mike Kennedy can do what Polaris couldn't. Listen to the riders who made Indian legendary and build the motorcycles they actually want. What do you think? Can Indian come back from 4 years of declining sales under new ownership? Or are we watching history repeat itself? Drop your thoughts below. And if you want to see what happens next in this story, hit subscribe. Because whether Indian rises or falls, this is far from over.